Hello, this is David, and welcome to Equity Story. I'd just like to, I don't think I'll talk too much about the general trend of the market. We're still really in that pattern of just being cautious at the moment, although we had a good day today on the ASX. The jury's still out, and we need to do a little bit more, I think, before we start putting out on a lot more trending stocks. I just really want to talk to you about the banks. I think I'd go for the banks now because I know nearly all our members here do have banks, and they shouldn't have banks. If they had good advice, I don't think they should be in the banks. But the fact that they don't is a lot of people are stuck in these banks, and I think they need to know what to do whilst they're in them. Just from a simple trading sort of trending point of view, really Equity Story in our system or our model, really from September, October last year, once these banks broke that trend, and possibly definitely on April last year, the banks broke their trend and they look like they're on the way down. Markets are very forward-thinking things, and I think really from April, May, June last year, I think the writing was on the wall that the banks were going to have a tough time. And if you actually look at the trend of these banks, for me the trend is still down. And this is I should say this is the NAB we're looking at now. And if you actually look at the NAB, it's having that little jump up, and potentially it could go back and test this moving average and then potentially come down. We're just not interested in stocks like this, and I suggest if if you picked that bottom and jumped up here, I'd get out of it because it's just a bad looking trend and a bad looking story. To try and buy these stocks, and also a lot of people saying, Dave, do I buy the banks? Do I buy NAB around this sort of level? I think to try and buy the banks around this level is really risky. When you should be buying the banks is when they're up here around this sort of 28 level, and you're buying the next move up. Try and pick these bottoms is dangerous because you just don't know how far they can fall. And I think Woolworths is a classic example of that. And you go back in time, and people were phoning me when Woolworths dropped. Dave, should I get some Woolworths? And I said, no, you just don't know. You just don't know. No, see, tries to test that moving average. You don't know. Bang, 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 and they can go down a lot further. And just looking at like ANZ as well, I think you got to be careful. You don't get suckered into these stories because suddenly you see this big jump up, and the banks have been shorted quite strongly recently, so a lot of people are having to cover their shorts as well. But the general trend is still down, so potentially it could come back, maybe $1 or $2 higher ANZ, but the trend is still down. And to buy these sort of chart patterns and buy it, for me, is really, really risky. And again, you can see just squash the chart up a little bit. Really, the story was over here in April again with ANZ. This is when you should have been getting out of the banks. And since then, ANZ, it's gone down, from $34 down to 22. That's a huge loss in your portfolio for a lot of people. And again, if you look at Westpac, again here you see the trend broke back in the same time, sort of April, May last year. And this is when, if you'd had good advice, you should have been getting out of the banks. And again, you see 1, 2. This could be the third time they try and break through this downtrend. Whether they do it or not is we'll wait and see. But potentially, I think if you're looking at the general sentiment towards the banks, I think they're going to have a lot more good news if you're going to get some sort of decent trend upwards. It's very important to stay out of these stories. A classic example I think is BHP. Again, this how any fund manager would let you be in this stock when it broke. At least, okay, give them a bit of at least when it broke that 35 level. It's criminal. There's a lot of people out there, I just don't think they know what they're doing. And you mustn't fall in love with companies. I think it's the most dangerous thing you can do. At the moment, you invest in shares. The only thing you're in is in the business of making money. To fall in love with a stock, or if you ever phone up your fund manager and he says, you've got to have BHP, it's a blue chip, we love it here, it's a great story, get rid of him because he doesn't know what he's doing. You're in the money business. It broke that trend. The trend was down, and it's gone from $35 down as far as 15. that is pain you don't need to be in. You know what your decent fund manager should be doing when he sees that sort of price action. He should be going on the ASX 200, and he should be looking at stocks that are going up. And at the same time, you know that stock was going down. You had great companies like Magellan going through the roof. Great companies, you know, exciting companies like even Domino's doing really well. You've got great companies like TPM here, TPG Telecom, absolutely going for the roof. There's no excuse to be in bad stories, and you know I know a lot of clients, quite a few. I managed to get them out of Origin. We're actually trending Origin, and when it broke this level, we got out. But there again, you know, everyone would have said, "Oh, Origin, it can't go down any further. It's a great story." Would we buy Origin here? No, we're not interested in it at all. You know, you look at good stories. There's plenty of them on the ASX 200. There's another great one, Transurban. Why look ever on weak stocks going down when there's plenty of going up? And the important thing to do is just don't fall in love with companies. Don't fall in love with things which are going up and making you money. That's basically what we do. I mean, on the ASX 200, I think Equity Story have done about 40-50% returns in a really horrendous, very difficult time in the last year and a half on the markets. And just simply because our trending just directs us into the stories we should be going into. And that's my little lecture, and that's a little bit what you get with Equity Story. I think I really started this company with a passion and the importance of trending the ASX 200 to show mums and dads you can make a lot of money out there if you just go into ASX 200 stocks and trend them up and stay away from all the rubbish. I'll just leave you with another really nice little trend at the moment, Focus Group. And at the moment, you know, a lot of these stocks, Focus looks very strong. We'd be in these stocks at the moment. At the moment, we're just holding back because obviously there's one there's one sort of very important chart which overrules every other chart, and this chart is obviously the ASX 200, and that's down, so we're just being cautious. And if we are going in things like Magellan the other day, you know, we jump out pretty quickly and take a profit. Anyway, thank you for listening to Equity Story, and I look forward to hopefully getting you some good trends next week when this market settles down. Thank you and good night.